Bitcoin's mirror move. What 2025's bear trend can learn from 2022's pain. Hey guys, it's Keith Allen. Are you feeling the pain, or are you well positioned for what we're experiencing now with this Bitcoin price action? It's nasty. Yep, it's nasty. A lot of people were somehow surprised. There's absolutely no reason why anybody should be, but we've discussed that previously. How you doing? It's Keith Allen, and today we are going to look at some of the similarities between what we're seeing now and what we saw at the end of the 2021 bull cycle, transitioning into the 2022 bear market. And, lots of similarities, way too many similarities to deny for sure. But a lot has changed since then, right? So considering all the changes we've seen in the crypto ecosystem, since then, we've had institutional adoption, we've had ETFs, we got a crypto-friendly administration, we have a more crypto-friendly regulatory environment taking shape. Lots of positive things, fundamentally positive things for the crypto ecosystem, yet price continues to erode. And so, even though we're seeing so much similarity now, doesn't necessarily have to play out the same way as it did in the 2022 bear market. So, we could throw out that history likes to repeat itself thing and say it doesn't always have to be the same, and history likes to rhyme, all those cliches. You get it, right? But let's just look at the charts and let the charts tell us what's happening and what's likely to happen next, and what we need to look for to determine whether we're actually reversing into a bull market. So in this analysis, we're gonna look at all those things. We're going to discuss some of the variables that could come into play to actually serve as a catalyst to trigger a trend reversal, and how that might impact price. And I don't know, anything else you guys want to talk about? Live chat is open, so if you would like to join me, I'd love to have you. As per usual, before we climb in, do me the favor of smashing the like button, share it right now. I'm going to give you 10 seconds to go ahead and share this stream with one of your crypto trading buddies or one of the communities that you engage with, so we can grow this channel. I greatly appreciate the support you guys have been showing me. If you are new to the stream, welcome. If you're an OG, thank you so much. I value you guys so much. Words can't even express. So we're going to look at fire charts and see what's happening in the order book. We're going to look at the candle charts and see all the similarities between the past and the present. And we're going to identify some potential downside targets to see where things could be shaping up. I'm going to tell you in full disclosure, I had an order ready to be filled right about where we are right now. And I'm going to show you what's happening in fire charts to show you why I just pulled that order. Let's go to the share screen and open up fire charts, our order book data right here. And as you can see, price on the decline here. We're looking at the daily chart right here. And there's been a bit of buying. There's been a lot of T-whopping between the smaller order classes. And don't be fooled. That's not retail getting wrecked. That is institutional level entities who are buying on a time-weighted average price strategy, and they're dominating those order classes right now. How much volume is that, by the way? We should take a look and see exactly what they've done here. The green order class, let's see. That's let's start with yellow, right? That's the smallest order class. Let's see when this started. So this started like early, really at the beginning of the day. So this is a rolling 24 hours here. So let's go ahead and switch it back to absolute view. Absolute CBD, and we can see that at that point they were down about net 6.5. We'll call it 6.5 million to the negative, and now since then they're up to 1.8. Right, so they have purchased 6.5, 7.5, 8.5, almost. Roughly, we'll call it 9 million in the past 24 hours. That's not a huge amount, but that is more than the average for that order class on any given day, which is really more like the 3 to 5 million range for that class. So that's above average. The green class started a little bit later At their low of the last 24 hours, they were down about, and that's $1,000 to $10,000 orders, by the way. They were down, oh, let's call it, we'll call it 5 million. Okay. And now they're up to about 40 million. Okay. So that's a pretty significant TWAP for the day so far, out of that second smallest order class. Meanwhile, you see that the whales that had bought earlier are now selling, right? And they have sold a significant portion of what they bought, and they're continuing to do so. So, are we going to get a little bounce here? We might. We absolutely might. But liquidity is thin here, right? This is, and I can brighten this up and make this a little bit easier to see, right? So, look, we had 11.5 million, 12 million here. And now a little piece of it seems to have half a million bucks worth. A little bit has moved up and added to this level here to try and insulate, maybe to front run or maybe to insulate. But look, they're getting forced down here from above. So I don't have a lot of confidence in this 65K level holding. That's why I pulled my order here. I don't want to catch that knife. And I'll tell you why I don't want to catch that knife. I've caught a few and they were daggers right through the heart. So, not a great strategy. Just looking to try and dollar cost average a scalp that is not going great, to be honest with you. But in terms of why we're seeing this kind of institutional behavior here at this level, the reason is quite simple. And let's switch over to the candle chart for that. The reason is this is a very noteworthy level here, right? We have seen a significant amount of consolidation at the 69K level here, okay, in this range, I would say. Of course, that was the 2021 top. And then in 2024, we double topped here. We kind of formed this massive cup and handle. And here's the handle here that developed into what was the bull market that kicked off in 2024 and through 25, right? And so we had like 8 months of consolidation below this level here. This is structural integrity, I would say. And so it's no surprise that we're spending some time here consolidating around this range now. It's also no surprise that we're not holding support at that 69K level. Now, does this mean that we won't ever poke back up? Of course not. But it means right now, bears are heavily in control. And so this range is interesting to me. And this is a good dollar cost averaging range for anybody on a long-term strategy who is trying to build a position. This is not where you go all in. This is where you add a little bit and you preserve dry powder for other potential targets down below. And where could those be? We'll get into that in a little bit. But needless to say, I don't believe that this is where the bottom is. I don't believe that 60K is the bottom for Bitcoin. And I'm going to show you why. So let's get into the similarities. And by the way, live chat is open. If I haven't mentioned so already, live chat is open. If you'd like to join me, I'd love to have you. These streams are always better when you guys engage. So if you've got questions, I'll do my best to answer them. If you have insight, by all means, please share it. We love sharing ideas and opinions here. So I've marked on this chart to make it a little bit easier to follow where the similarities are in what has happened, what's transpired in 2021 and 2022 into what we're seeing now. And as you can see, we had kind of this in the 2021 bull market, we had this what we thought was a top, and then a big breakdown, and then a rally back, and another and this ended up being the bull market top. And we started to see things breaking down on the weekly time frame. We saw it sooner on the daily, but we saw it on the weekly time frame when the 21, that's the green one, 21-day moving average, 21-week moving average, death crossed below the 50-week moving average. And then, of course, we lost the 100-week moving average, and the rest is kind of history. So you see this here, and you see this recently happened here as well. Okay. And so I don't think that this, I mean, is there a chance? Is there a chance that this could be the false top here? Sure, there's a chance, but I think um, that's not the case. I think that was around here, to be honest with you. And so here we have this breakdown. We can see what appears to be an eminent death cross coming between the green 21 and the blue 100. Looky, looky, right here, right? It's coming. We had it then. We're going to get it soon. And when might we get it? Well, I'm glad you asked. Let's take a look. I've actually drawn that for us, and this does not have to stay on this trajectory at all. This is just a very, very, very rough, unscientific model. This does not have to stay on this trajectory, but if it does, that would put this move somewhere around early March, right? This is March 9th, so that's the like second week in March. Um, that's possibility. And when that happens, expect price to degrade further. Um, Now, I want you to see something because this isn't straight line down, by the way. Um, there was a good month or so of consolidation, right? This started on May 9th, and wow, really? We're even close in time for when this happened. This started uh, on May 9th, and then we consolidated for nearly a month in this range before that cascade. And so, could there be moves up? Could there be support resistance tests to the upside? Absolutely, there could be. Again, this does not have to be exactly as it was last time around. And there's some moves that quite frankly we've expected to see that have not happened. We've expected to see some resistance testing around, well, we expected to see it up here around the 21 and the 50-week moving average. It never really materialized. We expect to see it here at the 100-week moving average. Didn't really materialize last time around. It might not materialize this time around, or it might. Okay, so what levels are those? That's around 87, 87.5, which is an interesting level. Why is 87.5 interesting? Well, let me show you why that level is so interesting. That level represents a very important timescape level. It represents the yearly open. And you can see it right here. Boom. This is, oh, right here, 2026 yearly open. You can see a perfect correlation with that blue line I just drew off the weekly moving average, weekly 100-week moving average. So this is a very important level and very interesting level to me. A resistance test here would be amazing. It would be an opportunity for a lot of people to exit. It would be a fantastic position, most likely to short from, assuming that this didn't like develop into a full recovery, right? What I had expected to see at some point in time was a retest of this level, and a breakdown is a sign of, rejection is obviously a sign that the bear trend continues, and a breakout is a sign that bulls are trying to recover the trend. And we can't even entertain that discussion without reclaiming the yearly open, in my opinion. Okay, so this is a very important range up here. Now, since we've had this kind of cascade downward, now the 21-day moving average is dropping lower into a range of what, 77 and a half. This might be the ceiling if we can even get past this, right? So if price can even rally back above this 2021 top at 69K, if price can actually rally back above that, then I would look at this as a potential TP zone, if we make it here, then we go to the next and the next, et cetera, hoping to ultimately get back to that yearly open around 87.5 as the ultimate resistance test that needs to happen. Now, again, this could happen now, or it may not happen until we actually get to the full bull market trend reversal recovery on a macro level. So those are things that we have to wait for. and things that we'll watch to keep in tune to what's happening, right? So now back to fire charts. Let's, now that I told you guys that I pulled that order, I'm probably going to get beat up here, right? But as you can see, let's make sure this is refreshed. Okay. As you can see, there's less friction to go up from here, right? It doesn't take very much to move up from where we're at right now. Liquidity is very, very thin in this range, right? That means it takes next to nothing to pump right back up to that 69K level or conceivably go higher. Meanwhile, what's happening here? Meanwhile, we've got nearly 50 million at 60K. And quite frankly, I want to see this doubled or tripled to have confidence in a bounce coming. And it's just not there yet. So again, this is an interesting range to DCA on a long-term strategy. But if you are trying to preserve your dry powder and you are looking for lower targets, then I would at the very least be looking to see what happens at the support test at 60K if we indeed get it. A lot of people were expecting us to actually go down lower into the 200-week moving average, which, as you can see, also has perfect confluence with a timescape level. Now, let me show you this right here because this is important. Timescape levels are indeed technical resistance and support. When they have confluence with other technical factors like the 200-week moving average in this case, this makes support even stronger, in my opinion. It makes the strength of this technical support even stronger. Now, Bitcoin has not really been respecting technical levels here lately. It's been news-driven and FUD-driven most recently. But at some point in time, the technicals will once again reign supreme. And so if this holds, that would be remarkably strong. If it breaks down, there is thin air in terms of technical support between 58 and the mid to high 40s. So keep that in mind. So that makes this a target as well, right? Sure, 58 is a target, but so is 48. And for that matter, I can build a pretty strong case for the 25 to 30K range because of the amount of time that we spent down there as well. You can see we back in that 2022 bear market, we bottomed out here in this range at like 15K, 15 and a half to 18, and then started to build back up. This was the really last consolidation and flip of the key moving averages that validated, in my opinion, the return of the bull, and the rest was history. So again, we had so much structural support in this range. It makes sense for us to be consolidating here right now. And it makes sense for us to do so for a little while longer. As we can see, we did it for about a month back in 2022. And what happened after that? We had the death cross between the green 21 and the blue 100 week moving averages. And those translated into a deeper cascade. And just as we are headed for that now, I expect the same thing. Whether it holds at the 200 or not remains to be seen. The 200 has been a very solid, historically has been a very solid level for Bitcoin until this 2022 bear market, right? Up until then, it had held for over a decade. So keep that in mind. I say over a decade, actually not quite a decade. I guess just about a decade. So keep that in mind. Now, what could turn this thing around? Lots of factors, too many variables to list. The easy ones that come to mind are potentially the Clarity Act, right? Or possibly the end to some of these geopolitical hotspots, right? Maybe the end to war in Ukraine, or end to the conflict in the Middle East, or removal of tariffs, or change of political power, or passing the Clarity Act. Any of these things could trigger that reversal. But I think it's going to be kind of a combination, and I think that it's going to be time, somewhat related to time, right? So, for example, if something happens tomorrow and we're not hovering around one of these key technical levels, I don't think that it's just going to be a miraculous recovery. I also don't think that we just get to the point where the market is fatigued and we run out of sellers at any given level or run out of buyers at any given level. I think it's going to be a combination where that sentiment changes. I think that um, banks, because of the Clarity Act, are very interested in onboarding Bitcoin. And I said this when the Genius Act was signed last summer. I said those guys are going to want to be buying when price is in a deep corrective phase, and we are in that corrective phase now. The timing is right. The bill should have been passed by, well, by the people who wrote its standards, by Cynthia Lummis's standards, and by President Trump's standards. But there's pushback on that, obviously, around a key element in terms of stablecoin yields. And I personally want to applaud Brian Armstrong, CEO of Coinbase, for holding his ground on that. Okay, because banks are trying to eliminate that because they know it's a big competitive factor for them. So keep that in mind as well. So in terms of targets, let's see if I have another chart here because I told you I would talk targets. Um, in terms of targets, I do have a few I have in mind. And like I said, I do think that the 200 week moving average is certainly a valid possibility at around 58K. But I like it a little bit lower. I think we had some significant consolidation in this like 48, upper 40s to low 50s range. And we just talked, what, 46, 48 we were looking at the other chart. So I think that's valid. And I can build a very strong argument for this 25 to 30K range. I've seen estimates down at this 15.5 range. I think it's, even though there's so many similarities between what we see now and what we saw then, I don't think that these similarities translate to going to the exact same price level. I think that that's going to be subjective. And so I'm watching this level by level for sure. Okay. I like this range. I also like the fact that we did have, and I think I had this on the other chart. We do have a bit of a potential double bottom scenario here around 53. Let me clean this up and make it easier to spot. We can see it here on the weekly chart. And if you're looking at this and going, well, those don't look like double bottoms because look at the wicks. Well, let's switch this over to a line chart and see how different it might look. On the daily, we can probably see it. And there it is. Okay. On the line chart, it was a perfect double bottom, like textbook. So this is a very interesting level to me at this point. Yeah, I like 58 because of the 200 moving average, but I think I like this better. So that's it. We'll call it 54K. Pretty interesting target, in my opinion. We'll go back to this other chart here. So there's that 54 level I mentioned, and that's kind of just around here, right? So, and that would be just below this 200 week moving average, by the way, but we're in that zone. If this happens fast, okay, in other words, if we grind here for a while and it takes months more to get down to this level, that would probably be attractive to me. If we get down here this week and we don't have a catalyst that says, hey, it's time to flip the market, or that convinces the market to flip bullish, then I'm not excited about this being the bottom. Why? Because historically, these bear markets have lasted much, much longer. You can see it here on this chart where we have these, where I have all the different cycles listed shown. Bear markets last much longer. Okay. Maybe it's, maybe as little as 5 months, maybe as much as a little more than a year. And so this would be consistent with what I anticipate happening in terms of this market, right? This started, right? The breakdown began in November 21. We got this confirmation around um I would say around these breakdowns in March of 2022, and we bottomed in November. So this is basically a year to the bottom, and which would translate for us as about a year from October to the bottom, if it were to be exactly the same. And it does not have to be exactly the same. It's probably not going to be exactly the same. Lots of similarities here, but I'm basically looking at a late Q3, Q4 bottom out of this market if the cycle kind of repeats what's happened historically. Um, so I'm looking for that combination of the timing, the level, and the catalyst when they all coincide. It's obviously going to be make a big difference. So, in terms of whether we go lower than that, again, a lot to do with the timing. And so back to this guy right here. So this would be my next range. And what I like about this 25 to 30K range is it was really, in my opinion, where we validated the recovery of the bull. At this stage, a lot of us, a lot of analysts, myself included, were thinking bear market rally, bear market rally, bear market rally. And then after this test of support around the 50-week moving average and the recovery of the um, other moving averages, in this case, the 21 and the 100, then we were off to the races. I was accumulating here at this point on. Um, well, I had started accumulating here, but I started going bigger here. In hindsight, once we recover the 50 or the 21 and the 50, I'd probably be feeling pretty good. Okay. This actually did recover all three moving averages in one candle. That candle was how much? 26% candle, right? A candle like that you expect to retrace. It did retrace a bit. We had a support test and then another big 15% candle, rejected, support tested, and then boom, this breakout ended up being the one. So those are my targets to the downside. Um, and I'm just going to watch to see how this continues to develop. Right now, the similarities are undeniable. Maybe at some point we'll see a deviation to that. But as long as it's the same, I'm going to continue to monitor it that way and treat it that way. Let's go back to fire charts real quick and see how I'm getting screwed since I didn't take that order. Right, still some price suppression here, keeping things in check. I think you got some knife catchers who might be feeling optimistic about a long here. I would caution you because I think that there's still a lot of downward pressure here that can push things down lower. It seems like they want to take this liquidity. Let me show you another couple of metrics really quick before I wrap it here. Let's head into the MI dashboard and see what's happening here with beta to alts. We can see that we're in a period of high beta. This is typically a sign that we are approaching local support, not macro support, but local support. And you can see this deep blue here happening on the chart. Look at other periods. We've had this deep blue happening on the chart, right? They were local bottoms. They bumped up and then another breakdown. Here, local support, boom, things moved on. So it's not always necessarily a macro bottom. It can be a local bottom that sees price appreciate, but then price can break back down again. So be very mindful of what's happening here. Let's go look at one more metric. I'd like to look at correlation between Bitcoin and alts. Similarly, we're seeing a lot of blue here, right? And this blue here signals what? It signals that alts are at or near capitulation phase. We know a lot of them have really broken down significantly. Um, ETH holding stronger than than most of them, right? But still breaking down significantly now below 2K. Let's look at Litecoin. Litecoin also breaking really historical structure here. As you can see, Litecoin way down. And let's head over to Solana. Similarly, look where Solana's going. Way down, my friends. Way down. Had a great support test down here. I wish I had taken along here because that would have been good for a quick scalp or a nice DCA actually on my Solana position. But if Solana loses this 68 level, there's nothing holding it up until we get down into like the 30s. So keep that in mind. Some really, I would say this, alts as we know it are getting hammered, right? There's no question about that. And a lot of alts are going to go to zero and evaporate. And this space needs to actually scrub them out, get rid of them. There's a lot of shit in this market that needs to go away. It's taking liquidity. It's taking liquidity away from coins that really deserve to be here and should be here. And so I would caution you if you're trading alts or you're investing in alts, be very selective about what you get into. But this is a time to be looking for those incredible opportunities because, quite frankly, this, in my opinion, turns into a really potentially generational opportunity. As you can see, if price recovers, from here into something that we've seen historically, hang on a second, I've lost my. There we go. If price recovers from here, look at where we could potentially go. All right, just even if this was the bottom, just to get back to where we were. All right, just to get back to the 2025 high is a 279% move. Just to get back to the all-time high, I guess that was the high, right? 279%. That's pretty solid year, right? if you can get that trade, if it indeed happens. Now, do we have any guarantees that Solana makes it back to its all-time high? No, but is it a good probability? Yeah. Is it a good probability this year? No, it's not. I don't think it is. I don't think we see any of. I don't think we see any new all-time highs in 2026. To be honest with you, I think we bottom by the end of the year, and late Q3, Q4 we bottom, and then we start to see the recovery. That's what I'm personally looking for. You might be looking for something different. I don't want you to follow me blind. I just want you to take the data and the insight that I share with you and apply that to your own analysis and your own research and figure out what works best for you. Let's go back to fire charts for parting shot before I have to wrap this thing up and head out to be a dad for the rest of the day. Okay, so I do still see some. It's thinning though. A little bit of thinning in this area. What's there right now? A mere $4.5 million. It takes nothing to penetrate through that. But I'm just not sure we're there yet. The good news is for bulls is that this is replenishing a bit down here. So that's interesting. We were at I think we were at 10 million when we first started this down here, and so it seems to be replenishing a bit. That is for the short term somewhat bullish. This could develop into a bit of a rally, but I don't think that this recovers into a bull market recovery from here. Not at this stage. Going to wrap it right there, guys. Hope it's been useful for you. Do me a favor if you haven't done so yet. Smash those buttons. Hit that like. Hit the share. Especially hit that subscribe button so you never miss any of my future streams. And if you're looking for more info, more insight, more engagement, You can find me on the X platform. You can find me on YouTube. And even better yet, join our Telegram group, the Material Indicators Telegram group. There's links to it in the description down below. There's also links on the Material Indicators webpage, and that's easy for me to say. And links on the YouTube channel, X channel, etc. You'll find them everywhere. Join us. It's a free community. We are engaging every day and talking crypto market 24/7. Come join us. All right. Going to wrap it right there, guys. Have a great rest of the day and a great rest of the week. The name of the game right now is protect your capital. Make sure you have powder to take advantage of these potential opportunities or these opportunities that are going to be presented to us here down the road. As you can see, price starting to roll back down a little bit here as the price suppression continues below 66 on Bitcoin. That's a wrap, guys. Hope this helps you trade smarter.